Hi everyone. Welcome to today's webinar, 20 Valuation Databases and Resources in 60 Minutes. My name is Dave Miles. I'm the presenter today as well as the moderator. Let's go through a couple pieces of housekeeping here as people try to log in. The first is there is a disclaimer on today's webinar. Please vet all the information for yourself. While I don't intentionally try to misguide people, certainly you can say things that aren't true, and you have to make sure that they're true when you say them. So please vet everything that I say today. I'll be happy to help you do that. Another piece of housekeeping is that the handout, the slide deck, is over in the GoToWebinar Navigator panel. If you go to handouts, you can download those there. At the end, I will show you my email address and phone number, and you are welcome to request the handout from me directly. There is also, I want to say, about 6 or 7 different pieces of information, 7 different samples of the types of things you get out of the databases. If you want those are too big to put into that handout session, and there's too many of them. So I can't put them over in the GoToWebinar piece, and feel free to ask me for those as well. The next piece of information that you need to know is today's webinar is not for continuing education. We do not take attendance, and because of that, it's not going to meet the NASBA requirements. So I just want you to be upfront and say today's webinar is not a CPE type situation. If you want those, I suggest you look at the NACVA CTI webinars. They have a lot for some low price, and you can get those. So let me tell you a little bit about myself. My name is Dave Miles. I'm a CPA. I'm also a CVA, and I've been at ValueSource for the last, I want to say, 17 years as their domain expert. And you know, I'm supposed to match what the computer programmers are doing with what the market space needs and try to be that bridge between the two. So today we're going to talk about the different data sets that ValueSource puts together and sells. One of those, well, we're not going to talk about one of those, but we're going to talk about how they're used, what the tips are of using each one of them, what maybe some of the traps are, each one of them, and you know, we'll try to go through that. So let's jump in. When you have a valuation practice, there are a lot of different elements that you need to consider. One of those elements is data. How much am I paying for the data, and what value am I getting from the data? And if you're not considering that, then you're missing the boat. There's a lot of things to consider, and certainly I don't want to take away from any of the other ones, but basically what we do as professionals is we try to say, here's a private company that we don't have a direct substitute for, therefore we're going to go and look at data and try to manipulate a substitute for it and say, here's the proxy for it. If there was a straight up across the board price, we wouldn't necessarily have any issues. You can do that with public companies. You can go out there and say, here was the price somebody paid on this day at this time for it, and you get that direct representative. Certainly not as the kind of work that we do here. Anyway, think about the data, what the value of that data is, and what the reward is that you're getting from it. On this next slide, we're going to talk about these different databases. That's the 20 of them that we list out today. Certainly we're going to spend more time in the transaction databases and some of those types of databases than some of the what would I call the knowledge databases. For instance, you know, if I go out there and try to find a valuation article or a conference presentation on a particular subject or topic, you know, we're not going to spend as much time with that. Also realize at the end of the session here, I will be offering a hands-on experience. We're not trying to give data away that you can do evaluation with, but if you want to see what is involved in it and you're brand new to ValueSource, you haven't seen it before, we'll be happy to set you up with some access so that you can get in there and see what it looks like and feels like, see if that risk-reward relationship is appropriate for you. So when you think about data, as I said before, we're trying to twist public knowledge or databases, and we are trying to twist that into a proxy for our subject company. Sometimes it's, you know, here's an industry that we're looking at, here's other information, and so when we look at that data, the database that we're trying to twist or manipulate and say, look, this here is similar enough to my subject company. What are the strengths and weaknesses of it? Is it complete? You know, can I explain how I went out there and created my sample size so that I can say, can you replicate it? You know, if you don't have replicability inside of your reports, you lose a lot of credibility. You know, does it meet the standards? And are you consistent with the fact pattern? These different items came from an article written by Tim Lee and LP Hood, what some top mistakes are inside of the reporting process. And certainly the data is part of that. How do you explain where the data is coming from? So the first database that we want to talk about is the National Economic Report. There's a lot of different sources for the national economic data. Certainly you can put it together yourself. And I don't know if I mentioned this during housekeeping. If you have questions during the presentation, feel free to populate that question panel and I will try to stop at an appropriate point and answer those questions. So if you have questions going through this, feel free to ask them at the point in time. You can complete NER data by yourself. You can go out there and purchase it from different places. Inside of our subscription packages, we have the Key Value Data National Economic Report. I'll talk about that more in a second here. Mercer Capital puts out a very nice report. BVR puts out a nice report, and I'm sure that there are others that are out there. And basically, you need to look at what's going on in the national economy, what's growth, employment, you know, productivity, and you need to tie that information back to the subject company saying, in this environment, would the price be higher or lower, and what element is driving that? And so you can take a look at the national economic data. The BVDataWorld or Key Value Data, NER Specifics, Kevin Hopkins is an economist, worked in the White House in the 1980s. He has delivering this information to us every month. He aggregates some important national data from different sources, and he adds some stuff to provide color to the numbers. You can get a sample of this report, have no problem with that, and you can see what's going on. In fact, why don't I click over here and say, if you were to get a subscription or a hands-on experience to the data, this is all online data. After you log in, you get to see all of the different products that are available. One of those products is the National Economic Report. So if I click on that, we're going to go into that particular data set, and then it's just a matter of looking at which particular month or which particular quarter you want. Now I will say that quarter end dates have a little more information than, you know, a monthly date that's not a quarter end. Say for instance August. But in this case here, let's bring up September's. All I do is click on View, and it's going to ask me to open it with Microsoft Word, and I press OK on that. Microsoft wants me to add permissions. You can see that this here is a Microsoft Word report, and I can edit it, copy it, paste it. So here's some information about Kevin Hopkins. You can see that. Use of the materials. Basically, we're expecting you to use this in a valuation report, but at the same point and at the same token, I've seen some people take this information and put it into, I was looking for a table of contents. I don't see a table of contents here. I'm sorry, I'm bouncing this up and down. But you can get an idea here. I'll stop and let it catch up to the screen. But I've seen some people take the economic report, put it into a newsletter and say, hey, here's what's going on in the national economy. You know, you get 3 or 4 sentences of some of the critical elements for your own clients in there. But you can see, you know, economic growth weakest in more than 60 years. You know, America's on the wrong track according to a report or poll here. And as I said before, I will be happy to send you a sample of this, but that's how easy it is to get to. It's laid out very nicely, 1.2, 1.3, 1.4. That's consistent from month to month and year to year, so it should be relatively easy to get to the areas that you want to get to. So we talked about all of this information here. Basically, you have to look at the report and tie that back to the subject company and evaluation space, and that is, you know, what is that effect on the value of the company at the end of the day? Industry and metro research reports. This here is a little harder to get, but certainly, you know, you say, and in the national perspective, here's this information, and now we need to break it down into more geographical and say, here's the local information, and here's the industry I'm looking at. You can certainly look at state BLS numbers, commerce departments, state and city economic departments. You know, I know here in Pueblo, we have the Pueblo Economic Development Committee, and you know, and you can go there and see what's going on. There are some commercial sources out there. First Research puts together a report. It's $129 a report. You can purchase that through the website that we were just on. You can go to First Research and try to dig out your particular industry. BizWorld is another great place. Most of the practitioners I know have looked at BizWorld and really like it. They have great industry information. BizMiner is a little less expensive. Here again, you can go to BizMiner and purchase a BizMiner report through the website that we were just on, $89 to an individual. And you can go to bizminer.com itself and get more information and get an annual subscription. What I want to mention is that Key Value Data has a custom research department. This is run by Patricia Braden. If you want a full documented, here's a Word report that you can copy and paste into a report. That's about $800, and if you want just data only, about $300. Now the nice thing about doing custom research is yeah, it's about twice as expensive, you know, as say a First Research report, but she can find information on crazy things like you know, somebody built roofs for chicken coops. And you know, how in the world do you find data on chicken coops and who builds them and that sort of thing? So she's gone out there and had quite a few relatively esoteric experiences, if you will. So I just want you to be aware that that's available for about $300, and she'll give you all the data sources. You can read through those, put together your own narrative inside of your report. Next, we want to roll over to the transaction databases. We're going to talk about IBA and BIZCOMPS, and we're going to talk about done deals. IBA, or I'm sorry, Pratt Stats is another database that's out there. It is exclusive to BV Resources. They also do a transaction data set in here. And so you can look at that. Basically, this chart is showing on a sales graph, you know, from very super micro is what I call it. Some people would call it Main Street businesses, but I'm thinking in revenues, you know, in the hundreds of thousands up to, you know, a couple of $1 million are IBA and BizComps. That's where they tend to reside at. Pratt Stat starts down in that range and moves itself up to, you know, a little over 500 million. And done deals starts at around that $5 million mark and goes way up. And when we get to those particular databases, I will be happy to explain what's going on with them. So let's talk about BizComps. In general, most people I know take these databases, IBA, Pratt Stats, BizComps, and what they do is they kind of do an initial pricing analysis with them. They'll pull down the data for that particular SIC code or that particular industry, and they'll get an idea of what the price to revenue and the price to discretionary earnings is, and they'll say, well, this here is about where my value needs to come in at, and helps them judge the quality of the engagement that they're getting, seeing how doable it is as part of that process. The other way that I've seen these used is as a reasonable test for other methods. So basically I do an income method, then I come back to the BizComps or IBA data, I'll do approach here, and it will come into the same multiple range that my income method is, and so it supports that, it collaborates the evidence in the income method. I am seeing a small trend out here where more and more people are trying to rely on the market methods by themselves. You know, the idea is that the definition of market value is what the business would transact for, and the market databases say this is what it transacts for. And so I'm seeing some small minority, I guess, a little bit, you know, bigger than the edges, saying, hey, I'm just using the databases themselves. So you can go and take that with whatever direction you want to go with it. BIZCOMPS itself was created by Jack Sanders. Now I'm going to talk about the IBA database. It was first in the industry. Jack Sanders looked at the IBA database and said, look, I can do better. And so he put together some more fields, he put together some more definitions, and he created the BIZCOMPS data transaction database. I talked to him, he said he liked my story best, but he also said that it was because he had to put together some data that he was trying to sell businesses, and he didn't have any data to sell businesses with. So basically they had a rule of thumb, and that was very inappropriate in most cases, and he just wanted to have you know, some data behind him when he went to talk to the business owners and said, look, this here is what the most probable selling price is. And so he put together this, has basically, I want to say, the IBBA, not IBA, but the IBBA is feeding his data for the last 10 years. Today I'm finding that a lot of different brokers are feeding all three databases. They're feeding BIZCOMPS and IBA and Pratt Stats, but in the past the overlap has been very, very minimal, and I think it's only in the last year or so, maybe the last 2.5 years, where I'm seeing some of the transactions come in from the same person to all three data sets. There's 21 data points available. I suggest you go out to bizcomps.com, download their guide. You can see exactly what's going on inside of the data. There's over 12,000 transactions as of May 2016. 50% were all cash sales. 82% were for purchase price less than $500,000. Here again, I'm talking about that super micro business. Some people would call it Main Street businesses. There is an analysis tool with linear regression and histograms inside of there. You can see what's going on. The slide here gives you an idea of how many transactions per year are inside of the data set. And that'll give you an idea. You know, take those transactions and say, what was it, 80% or less than 500,000, and you get an idea of what's going on. Average sale for BIZCOMPS was 377,000. Median sale was 200. 227 days average on the market. Median is 180. So that 6 months on the marketplace is pretty typical, and that's where the median falls at. The majority of the transactions involve a 10% brokerage fee. However, transactions over $500,000 demonstrated a size premium. The ultimate sales price was about 30 to 70% of revenue. So, you know, 30 cents to 70 cents on a dollar of revenue, and 1.35 times to 2.62 times the seller's discretionary earnings. Where I came up with those is I would array the entire database, cut it off with 25% of the data being below that number and 25% of the data being above the 75th percentile. And so that gives you the middle transactions, the inner quartile, if you will. And that's where those numbers are coming from. So the big deal with BIZCOMPS and IBA is to understand your definitions and then making sure that the definitions match the circumstances. So what's included in price, is real estate included, not included, and you need to have a hard understanding of what that really looks like and feels like. You know, fixed assets are typically transferred in the price, but what happens if the fixed assets have an extraordinary view or an extraordinary value? Example would be, here's a construction company and they have a lot of cranes or cement trucks, and so they're trying to do things. The more equipment they have, the bigger sales they can have, and so maybe their F&E isn't quite on the mark for what was being transferred in the operating thing, and you'll have to decide that. That would be the expertise you bring to the equation. As far as value goes, you can get we call it an a la carte subscription, but basically what you're looking at is, hey, if I buy BIZCOMPS by itself, it's about $550, $600. If you buy it in a small subscription package, you can get that down to $345. In fact, you know, you should take a hard look at the smaller subscription packages if you only do a few valuations a year. If I'm doing 3 to 5 valuations a year, I would take a good hard look at some of those silver and gold subscriptions and seeing how I could supplement it. If I'm doing 10 or 15 valuations a year, I'm probably looking at the titanium subscription for a good value. Let's look at the IBA market data. IBA market data, again, is included in all the different subscription packages. In 1978, Ray Miles put this database together. So he was out there and said, there is no data on this. How do I find, he knew that some companies were stronger in the marketplace and some were weaker in the marketplace. And the example that he gives would be something like, I have a pizza place on the south side of Pueblo, I have a pizza place on the north side of Pueblo. If one of those has a lot of health citations and the other one doesn't, am I going to pay the same price for both of those businesses? And the answer was no. So instead of using a rule of thumb, he said, let me get together some data and create an industry marketplace, if you will. Here's a marketplace for this particular industry. And then I can tell what the higher end is, what the lower end is, and then I can put my business into that. A little sidebar on Ray Miles, we both have the same last name. Last time I talked to him before he passed, we went back 4 generations and did not find any crossover, so it's just one of those unique situations where there's 2 last names that are the same. IBA was acquired by NACFA, merged into NACFA, but the database still is still being owned and managed by Adam Appraisal Database and Mentoring Services, and so that data is still available. 39,000 transactions. Now the reason that BIZCOMPS has 12,000 and IBA has 39,000 is the time period. So IBA data goes back to 1978. There's a few transactions even before that. But basically you're talking over 30 years of data here. And so there should be more transactions in there. If you limit your search to say the last 3 to 5 years, I think that you're going to come across very similar results. And like I said, the overlap, and the last time I checked, was less than 15%. Now that's changing in the last few years, and I haven't really reviewed that, so you can take a look at it if you want. Started with 4 fields, then moved to 10, and it gives you an idea of what those are. And you can tell that most of the transactions are in that super micro business as well, that less than 500,000. Now I'm going to show you the different ways you can search for something here. And if I click on the IBA market data, I'm going to type in a description here. I'm going to type in steel. Pueblo's a big steel town, or was a big steel town. And so I'm going to pick this 1791. So I'm going to clear my search, go into SIC codes, and say, give me 1791. And if I limit this to the most 10 years, I can put a check mark in there. If I want to see all of the different data, I uncheck mark it. And so I get, 15 different records here. Pretty small sample size, but we'll go with it. I click on the button down on the bottom, and there is a direct market data method. When I click on that particular item, I will get a spreadsheet that has some macros in it that will allow me to search and sort that list. So like I said, I picked an industry where there was only 15 records. If I was doing dentists or if I was doing restaurants, I would have a lot more records, and having this macro-driven spreadsheet would make a lot more sense, because then I could start to narrow it by the different controls. So I enable my macros. Here's the extended data. If I wanted to get out just the data, just the fields of data, I could get just this sheet, and it's called data only. When I click on select transactions over here, I can select the transactions that I want to use, putting in 1s and 0s. I can also come over here to my tools category, and I can right click in these boxes, and it will go in and select things. So say for instance, if I wanted to have a revenue between a certain min and max, I could figure that out here. If I wanted to do it by a certain state, I could figure it out here. If I wanted to filter those transactions, I could do it over here. So there are some tools that are pretty nice that helps you. So I just selected all of the different records. This here is the transactions that say here are the transactions I'm using in my data. So I come over here to the statistics. Now I'm a grid kind of person, and so here's the transactions selected. I'm saying, okay, here's my mean. So here's my arithmetic average. Here is my median. So my median and my mean are spot on. Tells me there's not a lot of skew going on here. For price to seller's discretionary earnings, it looks like there's a lot of skew going on. Because of that skew, probably might want to choose the harmonic means. We calculate that for you. Gives you an idea of what the spread is on that particular data. And then it can tell you the range as well. 24 cents to $1.50 is a big range for price to revenue. So that tells me a lot. But I'm a grid person, and seeing numbers on a page makes sense to me. Some people don't think that way. And so we have the ability to put that information into charts. And the way that the direct market data method is set up is that here's 25% on the top, 25% on the bottom. If my pricing ratio is in the middle of that, I am probably in the inner quartile, and that makes a lot of sense if I'm trying to do a reasonableness test. We also have the ability to add these blue lines. The blue lines are the 10% above, 10% below, meaning if I have a transaction in that range, it's an exceptional transaction, and I should have a darn good reason as to why I'm getting a crappy price or I'm getting a really great price. Is this a strategic sale, for instance, for the really great price, or has this restaurant been around for too many years and the neighborhood just outgrew itself and there's nothing left? Is that a reason why it would be down in the bottom? But you can tell that this information is coming out automatically inside of a spreadsheet, and you can use this analysis tool to help you derive a multiple using the IBA data. They both share the transaction analysis. The transaction analysis is more along the lines of, let me do a simple linear regression line. Also has a histogram. It breaks up the different transactions into different buckets, and you can see how many times a particular sale happens in a bucket. Obviously if you have a price ratio inside of one of the buckets that's more common, that's going to give you some more confidence. But that's what the transaction analysis does. It has the same front sheets, but instead of showing those p-tile ranges, it shows the actual regression line, simple linear regression line. So let me come back. And here again, you need to look at the different definitions of what's included in price. Obviously, no real estate is supposed to be included. When you look at some of those transactions, maybe you'll find out that it is included. And pricing. Standard Atom subscription is $500. You can also get it in those different subscription packages that I was talking about, starting at $345, going up to $26.50. Done deals. Done deals information comes from 8K filings. So basically somebody is out there saying a public company has either been sold or a public company has been acquiring a private company. And that information is done through the SEC, and then we go out and we pull in that information into a database. Not us, but the Done Deals database does that, and we resell that information to you. Because these are publicly traded companies that are reporting this information, the transaction size tends to be a little bit bigger. I think the only reason public companies would go after those very small super micro businesses is because they have some sort of technology that the big company wants. So as of May 16, 11,000 transactions, 75% of those are privately owned companies being acquired by a publicly owned company. There's a lot of transparency here because it's all done through the SEC filings. You also get the names of the participants, so you can go in there and do your due diligence if you need to. The big deal with it is that it includes both stock and cash sales. In fact, the terms of the deal, you have to look at the terms of the deal and see if there isn't some debt being exchanged as well. So coming up with the value that you really want to come up with may take a little bit of effort. The transactions, basically that inner quartile is between 6 million and 66 million. Average, or the median deal price, they're all central tendency. Median deal price is $20 million. And that's the big deal with done deals. It's publicly traded information. And Done Deals comes in the highest levels of the subscription packages, or you can purchase it a la carte for $600. So let's talk about Pluris. Pluris DLOM is a database, and I can give you a guide handout that says here's how the Pluris DLOM data is put together and how you would use it. But basically, what's going on is they're pipe transactions, private investment in public equities. Think hedge funds. And so a company can't raise capital in the marketplace, and because it can't raise capital in the marketplace, it's looking for a different way to raise capital. It will sell its stock at a deep discount to a hedge fund. There are sometimes restrictions on selling that stock. The biggest restriction is that they usually purchase so much stock, or they get so much stock for the capital infusion, that they couldn't sell out of that stock in say 20 quarters or something along those lines in 3 or 4 or 5 years. So they're basically having to hold on to this stock, and that's why the discount is there. Oh wait, doesn't that sound like a discount for lack of marketability? If I can't get rid of this, you know what I mean, do I take a discount in the price for my holding period? And that's what this is supposed to derive. So keep in mind that the data is coming from private raise. Those are the transactions that are being reported. Pluris adds a little bit of information to them, financial information, and then the database is published. So you're looking at transactions here for companies that need capital that are not easily getting capital. So for instance, if you're looking for REITs or something along those lines, remember there's real estate backing most of that, and if the real estate is available as security on the loan, they're probably going to get their money from a place other than the need of capital infusion. But think like biomedical. Biomedical people, they're all trading in ideas, little labs, and there's not a lot of security to go for a loan or to give somebody. So what do? They can't really sell stock because they're already trading at a very low price, and putting that out there would create some issues. So you go to a hedge fund, they give you capital, you take your idea to market, get the FDA to approve it, and you're off and running. What's it used for? It's used as empirical evidence for a defendable discount for lack of marketability. Typically, I see this being used inside of the IRS wealth transfer type engagements. It's inside of the titanium package. Let's see, here's some data as of 2014. There was 3,500 records, 373 4-digit SIC codes. Median block size was 12%. That block size is saying how much stock was transferred in the sale. Median discount of about 20%, and an arithmetic average discount of about 22%. And there's ways that they manipulate the data to come up with a DLOM. The biggest is how long does it take you to get out of it, and they take those large transactions and develop a very high discount for lack of marketability. Very defendable. I'm running out of time here, so I am going to skip the demonstration of that. As I said, we do have a handout. Here's how the Pluris DLOM data works, and you are welcome to get that. Duff & Phelps puts out their valuation handbook every year, and in 2016, that's pushed out there. Everybody is well aware of it now. SBBI stopped publishing, and so they have that. I will say this, that I believe that Duff & Phelps is also publishing the SBBI Classic Edition. If you go to Amazon.com, you can get the Classic Edition for, gosh, I want to say just a little bit close to $200. But remember, the Classic Edition does not break down your decile information. If you want the decile information, you absolutely have to get the valuation handbook. That's inside of there, as well as the risk premium studies. They also provide a book called Industry Cost of Capital. Industry Cost of Capital takes the samplings of the different industries, and based off of those samplings of the industry, and this is how they come up with the IRP inside of the the industry risk premiums, and they use that same thing to say here are some industry relevant ratios, quick ratio, debt ratios, and also can come up with a beta for a particular industry. And you know, certainly we have you can get a sample of what one of the pages looks like for that industry cost of capital. There's an international version available. If you want to look at what different country risks are, they can give you an idea of what the different country risks are inside of that. One of the things that ValueSource does is that we have, let's see, everybody knows all about this. Expect the book price to go up in 2017. I thought it was $295, but there's data that comes with it. The data tries to make things easier. So basically, if you're doing the risk premium reports, this is where you have the 8 different characteristics of size and the 25 portfolios. We tried to make it easier than the calculator was in the past. So you have your 8 characteristics up here. You type in what they are. We're looking for whole dollars inside of this particular area. And then there are 8 ways to get the information out. Typically, people only want to get out the build-up way or maybe the CAPM way. And so we don't provide all of those other ways to get out the data. If you do want to get the full report, you click on this detailed documentation down here. You click on that, and you can choose whether you want a premia or whether you want a cost of equity. So if I'm just trying to decide, here's the ERP I want, that's different than trying to say, here's my whole cost of equity without company-specific risk. If you do the normalization of ERP, you put that into there, and you press the button down at the bottom. You can't see it on the screen here, but you press the button, and out comes your spreadsheets with all of that calculator on it. You can also choose which book you want to use. I think in 2017 you can expect to have this only have one year on it. I don't think you'll be able to go back to previous years. I don't know what that means to you, but if you currently have a subscription, make sure you use the little PDF button down here at the bottom to go in there and pick out your PDFs of the risk premium reports, those exhibits, you know, A, B, C, D. I think those are the relevant ones. I thought there was an E too. I'm trying to remember. But yeah, you might want to pull those down in PDF files instead of the book itself. But in 2017, I think you can expect to have just a single year on here, not multiple years. RMA. RMA is used in the benchmarking of a company. So the idea is where does your company stand in the industry? What are the strengths of your company? What are the weaknesses of the company you're trying to put a value on? And you can get different valuation or different industry comparative analysis from different places. RMA is the place I like best. That's just a personal preference. Certainly wouldn't argue with anybody if they said, no, I like Integra. Integra is a great place to get the data. They have a ratio for everything. What Integra does is they pull together a bunch of different government sources and create a model of the past. Because it's a model, they have a number for everything, but you have to realize that it's a model of the past and it's not actual numbers. And that's why I would choose RMA over Integra's, because they're actual numbers. Doesn't make me right, doesn't make it better, just saying that that's how it kind of goes together. IRS Corporate Ratios are another source of that data. IRS Corporate Ratios are from the Form 1120s, so the statistics of income comes out. In fact, I'm going to talk about that in a second, so I don't need to talk about it here. I'm going to skip the rest of those. RMA was put together in 1915 by a group of bankers to mitigate credit risk. Today it's known as the Risk Management Association. It has an international bent to it. The numbers inside of the annual statement studies are coming from America, though. There may be a foreign company that's doing business in America, but those annual statements are not necessarily international at this point in time. Geographic regions, I don't think anybody has a problem with that. You can get that inside of the valuation edition as opposed to the standard edition. Sometimes geographic regions will help you understand what's going on in a particular area. The big deal about the valuation addition is that it takes a slice of, or an element, let's say it's the quick ratio, or let's say it's the gross profit, and it will take the sample size and cut it into 10 parts, and it gives you those 10, 20, 30, 40, 50, 60, 70, 80, 90 percentiles. You can then use linear interpolation to figure out what percentile your company is in. So the big deal about the valuation addition boils down to this. Would you rather have a statement that says 85% is my company's operating expense ratio, 85% is the RMA average, therefore I'm average, I don't have any adjustment to higher or lower risk or value? Or do you want to say, my company is trading in the 38th percentile, only 38% of the companies out here have a lower operating expense ratio than me. That makes me stronger in the marketplace. I deserve a higher price. And that's exactly what the valuation addition does. Keep in mind, you know, when you try to cut up a sample size of 12 or 15 into 10, you're not really getting any good information. But a lot of times these data slices will have 200 elements in it, or a sample size of 200. Cutting that into 10 pieces starts to make sense, and you can start to see where the skew is between the median and the arithmetic average. I'm doing some RMA webinars. Highly recommend you keep an eye out for those. It's one of my favorite ones. I think you would absolutely be amazed at what you come away with. Anyway, so that's what we're doing. A lot of information in the slide deck. Pricing, you can get the RMA valuation edition for $725 if you want to get all of the years available to you. If you do a multi-year analysis, it's about $29.25. It's included in the titanium subscription. So this is one of those areas where I'm starting to say, look, if you're doing a lot of valuation work, maybe that titanium subscription makes sense, because, you know, if you're almost half of the price of it is going to be caught up in taking care of the RMA data. And not having that source doing 10 or 15 valuations a year would be a real weakness in my mind. We talked about this screen here. This is where you get to see that percentile. In this case here, you know, 1.7% is in the 82nd percentile. So if you're trying to compare 7.81% to 1.7% average, what do you say inside of your report? If you say I'm in the 82nd percentile, 82% have a lower pre-tax profit rate than my subject company, now all of a sudden you've established credibility, you've established you know, a reason why that company is worth more than not. Guideline Public Company. Guideline Public Company is included in the different pieces here. You can get that information from a lot of different sources. We are working on it. We're challenged by it a little bit, but if there's data available, it's a good source. And when I say that, I mean that there's several industries out there where you have a different flavor income statement or a different flavor balance sheet, and we don't handle those different flavors. So we don't have any banks, for instance. We don't have any insurance companies, for instance, because they're working off of an arbitrage model. And so some of those are missing from it. In addition, we don't offer any delisted stocks, so it's only current as of the last time we updated it. We tend to update this almost every month, definitely 2 times a quarter, and so it's fairly current information. A la carte, $500 a year, and like I said, it does come in the different subscription packages, so if you need to get public company information, that's available. IRS data, IRS comes out from the Form 1120s. So anybody that's filed a tax return on Form 1120, you get to see what their tax returns are. ValueSource takes that information, creates the ratios database from it. We use the same definitions as RMA, and you can use that as an industry comparative. The nice thing is that it's fairly inexpensive, you know, $250, $275 a year. But it's 3 years old. It takes the IRS, you know, 3 years to go back and statistically analyze their returns to get it out to us. So while I think it's a very complete and very accurate source, you know, here are actual pieces. There is one layer of modeling involved. There's some statistics involved to say here's what the averages are. But I think that the statisticians there are probably top-notch. And you know, so the data that we're getting out of it is top-notch data. The problem is it current enough for your valuation work? Because in 2016, this would have been, I want to say, March-ish, we put out the 2016 IRS data, and that would have been from 2013 returns. And so you have to be a little careful. Here again, look at the different packages, you know, that comes in gold, platinum, and titanium, and you can do that. Here's the statistics of income on the slide deck. They haven't published this book in forever. It's all downloadable data. If you go to irs.gov, you can search on statistics of income, and you can see what that data looks like. They give you the returns, the Form 1120s inside of here. And so just be aware that's where it comes from. Very transparent, very easy to see. In fact, a lot of the benchmarking companies that provide those models will definitely use that data. A few more going on here. We have Mergerstat. This is based off of Mergerstat Review. It's inside of the Titanium subscription package, or you can buy it $125. Keep in mind that you're talking about 50 industry lines here for PE ratios or the control premiums. Here was the control premium amount over what a normal price would have been, and that's summarized data. And that's why it's $125. So what I tell people is if you need to see individual pieces of data and tie that into your subject company, this is not the data set for you. You need to go and find something else. What is it? The control premium study handles that, or even get the Mergerstat review book itself that has the 100% control positions purchase, and you can see what the individual transactions are. So you get a summary data. No individual transactions with this. You'll have to decide if that works in your particular practice. I see it used a lot with IRS wealth transfers. Hey, I just need something here for the control premium. It's not going to be outrageous. I just need to be able to defend it. Here it is. Another database that's available is Around the World Valuation World. This here is one of those e-zines, an electronic zine. So basically you can go in and you can pull up information and see what's going on in the valuation world. And so these are the different people that will interview others. I believe I saw Greg Caruso there interview Judge Lauro, and there was a 5-minute blurb on how Judge Lauro sees the valuation community. You know, some interesting stuff inside of there. And people do different things. So, you know, Janae went out there and did some valuation updates. Those are available, and you can see the archives of it through the database subscription. Melissa Gregg was out there and talks about how to defend your valuation assumptions, and you can see what's going on there. Toby Tatum was interviewed on Monte Carlo methods. You know, he's big into statistics and understands that really, really well. So seeing some of those things in a little summary would give you an idea of what's going on in the marketplace. The last databases that we want to talk about here is BAP. Interesting thing about BAP is that it's going to be discontinued in 2017, but that doesn't mean that the articles of yesteryear are not appropriate. They still are, and you can go in and you can get those articles through our databases, through the database subscriptions. Industry and Metro reports, these are archived ones, so they're a little bit on the old side. Somebody has paid, you know, $800 or $300 to get this data, and you know, 3 or 4 years ago, this is what that looked like. You can see what those are. I like the valuation articles data set. You know, it's hard to find a place where we have curated valuation community articles, and you can see a lot where those were at. A lot of those have reprint costs, and so, you know, you can see what the reprint cost is and where to go. You go to valuation strategies for a particular article, you're going to be paying that reprint price. And there's a lot of free things. So if you get in there and you see an article in a quick read, you know what I mean, those are free, and you can pull those down and access those articles now. So if there's a particular area that you want to look at, you can do that. There is a case law data set inside of here. It's supposed to be curated for valuation, and you can look up different cases that are inside of there, and it's another place to get a summary or detail of a particular case. There are conference presentations. I like this as well. You can go out to the conference presentation. You can look at your, your leading speakers and see what they've done different presentations on, or you can look up a topic and say, oh, here was a conference presentation on the topic. And certainly, most of the speakers I've ever met have been more than willing to talk to you about almost any subject if you're asking for help, and so you can see, hey, what was this topic and what do you think about it now, and certainly you could do that as well. But having those conference presentations has been helpful to me in the past. We also have a compensation database from the BLS. That's a government agency. You're not going to find executive type compensation things inside of there, but if you want to find what an office manager would make, certainly you can look and see what that is and drill down to your particular community. That's a data set that comes with all of those. And the S1 filings data set. So basically a company is going public. They have to do, the big report and say, here's how we fit in the market space, here's why we should do well, here's what our weaknesses are. And you can see some gold nuggets pull out of those if you can find a particular state or a particular data, a particular SIC code that makes sense for you. But the S1 filings are public information, and those are aggregated by state and by SIC code, and you can pull those down to see if there might be some data nuggets inside of there, some different sources of data that you might choose to use to see how your particular company fits in a particular space, if you will. That wraps up the conversation here. And I am not seeing any questions pop out, so I am going to leave this screen up. Really, I believe in a help other people succeed in what they want to do kind of world, because if everybody's successful, the world will be a better place. That's really how I feel about things. So reach out to me, dmiles@valuesource.com. I'm on LinkedIn. If you look up Dave Miles CPA on LinkedIn, feel free to connect with me. Anything I can do to help you understand these data sets, anything I can do to help you in any way, feel free to reach out to me. I really appreciate that. But that's how you can get a hold of us. Tanya works in the office with me, and she can set you up with access to those different products that we have. Want to thank you for your time today. Hopefully the session was helpful, and you have a takeaway that you can take back to your office. So I'm going to leave this up here, but I'm going to sign off myself, and have a great afternoon. Thank you.